Welcome to the Crypto Compliance Podcast from Cense. I'm sitting at the table with Hugo and we're looking at why banks struggle with crypto flows. And we're looking at it from the side of the bank, correct?
Yes.
Hugo, let's start simple. Why do the banks struggle with the cryptocurrency flow?
Actually, it's quite natural. So if you take a look at what do banks do for the last decades, we have a euro asset on the SEPA network, and this is quite understandable, right? That banks have been doing this. We have been doing this for decades already. So we have a really good understanding. What does the SEPA network do? Who are the counterparties? How do we assess this? How do we calculate all of this? Now comes the complexity of the blockchain. So take, for example, the Bitcoin. We add another network, just like the SEPA network. And then on top of that, we add an asset called the Bitcoin. But the blockchain doesn't just exist out of the Bitcoin network. It has thousands of blockchains and then hundreds and thousands of different assets across all of these blockchains, which then also can move from one blockchain into another blockchain. So basically, we're getting an exponential more amount of networks and assets that we now have to understand and have the ability to deal with. And that's the new reality that we live in. And that's not easy. You need to learn how to do that. You need to understand how that works, and all of that knowledge still needs to, be properly embedded into the organizations in order to have an as clear understanding of those networks as we currently have of the SEPA network in the euro.
So that's a lot more clearer than I understand why the banks struggle with it. What kind of pressure are those compliancy teams under?
Well, I think the average compliance team has to deal with that complexity, right? So he needs to start making an analysis on how does this fund of flow moved, what happened, and the challenge with the blockchain is these assets are not just they don't have a single purpose. They usually have multiple purposes. So you can pay with an asset, or you can invest with an asset, you can trade with an asset. And that, for example, so if I just make the payments, right, then I need to start understanding the counterparties. Now, the counterparties basically is a wallet, right? That means that I don't see a name, I just see an address. Now I need to figure out, okay, what is this? Before I can actually accept that money, right? So I need to understand, where does this money come from? Where does it go to? Who are the counterparties? Are they risky? And within the normal traditional financial world, I know, okay, so I'm sending something to a financial institution. I know this financial institution. I have a risk score for this financial institution. I don't have this on the blockchain. I have a wallet. I don't know anything about this wallet. I don't know even whose wallet this is, right? So, and now I need to start calculating all of these kind of things. Then the next step, for example, what if you would do a lot of trading, right? So now you're suddenly generating 20,000 transactions because you're actively trading. And now a compliance officer needs to calculate through that 20,000 transactions in order to understand whether these trades were done in a normal way, right? So 20,000 lines in your Excel that you now have to go through. And this is not even a big trader. This is a small trader.
Yeah.
Right. So, and then the difference is so does this happen on the Bitcoin network? Does this happen on the Ethereum network, which brings different typology basically on all of these kind of things, right? So on Ethereum, we have this new thing called staking, for example, right? From the crypto world, we don't call it new, but from a traditional side, there's just magic money popping up, right? How do you deal with this?
Yeah.
And as a compliance officer, you basically, you have a legal obligation to have a proper understanding. So you need to have the ability to analyze this, right? But at the same time, you're in a business, so you're under time pressure to analyze this, right? So say, for example, on an average case, you have maybe 50 minutes, 30 minutes to make a decision whether you can accept a customer or whether you have to escalate a customer. And in that 30 minutes, you can't make an analysis of that blockchain. It's just not possible. So this is where the pressure really comes, and the pressure cooker really comes, because from the business side, they need to hurry up. But from the complexity of the technology, it's not possible to hurry up. And this is the mix where they're in.
Yeah. If you bring your business to the bank, it's not the bank that wants to say no, correct?
No, of course not. The banks just want to do business, but they have a legal obligation to do it in a proper way. So, and when you have a money flow coming into your bank, the business side of the bank, of course, they want to help you. They want to be able to capture your money. They want to, help you invest, for example, or help you make payments or help you make save. I mean, this is the role of the bank, right? And this is what they do. But then the compliance teams comes and they go like, okay, do we understand this money? Do we have an understanding that this doesn't come from illicit flows or from counterparties that we don't want to have interaction with or anything, right? And they need to make that assessment before the business can actually accept that money and move with it. And also the bank makes money with the money. So they have no incentive to say no to these crypto flows, but it's a risk management thing. So do we allow then this money flow? Is it compliant, this money flow? And do we run any risk as an financial institution if we run with this money? And that's basically where
the disconnect between the yes and the no is from the bank.
Absolutely, yes.
Yeah. You've worked with both banks and regulators. Do you think that this is one of the main problems that they have? Convincing their clients that they want to say yes, but they don't know how to say yes?
Well, at the end of the day, it's a risk management thing. So what is the risk of being able to accept these money flows? And then when you take a look from a regulator perspective, right, they basically are there to regulate the law in which these banks are allowed to operate. So at the end of the day, does a regulator tell you cannot do crypto? That's not something a regulator would actually say. A regulator's word would be, you need to apply the law. At the end of the day, I mean, it's as a financial institution, my choice how to apply the law, right? And then afterwards, I can be slammed for applying it wrong. Or nothing can happen because I did it right. Right? But at the end of the day, it's my choice as a financial institution how to apply the law. And the regulator finally only has to say, you need to apply the law.
Yeah. Well, that's a lot clearer. Do you see a big disconnect between law and technology, if we look at it this way?
Well, I would say yes, because the law is technology agnostic. So from a law perspective, the law doesn't care whether you work on the SEPA network or on the Bitcoin network or on an Ethereum network. That's not something the law manages, right? Or governs. The law governs that you need to understand, where does this money come from? Where did it go? How did this came to be? Is this illicit money or all the other things? Right? So at the end of the day, the technology and the law don't have a connect at all. Law is first and governs our country and our society and our financial flows. The technology that we put underneath that in order to make things more efficient or nicer or more transparent or whatever, that's not of a concern of the law. That's if you introduce a new technology, you still need to apply the law.
Yeah. So the end game for the law is still the same, whether it's 10 years ago, 15 years ago, or now.
Absolutely. And of course, the law does evolve, right? So we get updated AML laws because based on what we see in reality on how money is being misused and all of these kind of things, we strengthen that law. But it still doesn't mention the technology.
No.
So at the end of the day, it's the law that needs to be applied. The technology that you use is up to you.
I've heard the term fail equals jail. What do you think about that term? How does this comply to this business?
Yes, well, the thing is that compliance officer have a special mandate, basically, to protect the bank from dealing with illicit flows and upholding the law. They are also, in principle, personal liable in order to protect that bank. So that's why you basically see that a discussion between the business and the compliance side, where the business wants to do something, but at the end of the day, if it's not compliant with the law, then the compliance officer is the one who gets slammed by the regulator. So in those cases, I mean, fail equals jail. I mean, I haven't seen anybody or very few people go to jail because of compliance issues. But at the same time, they do have this personal liability that supersedes whatever the business basically wants, right? Because they have a higher goal to attain, right? And making money is, of course, a private goal from the bank or the financial institution, but the compliance officer needs to protect that. So they have a a special relationship between the two where they need to be able to collaborate, because at the end of the day, the compliance officer is liable.
I've also heard a lot of people say that the tech is ready, but the people aren't.
Yes, the thing is that it's just not only technology that makes something move, right? So there's always a threesome of things called people, process, and systems. And those three need to be in harmony in order to move forward. So if you apply this to the crypto space within financial institutions, that means like we've got people, we've got processes, and we've got systems. So the compliance officers, they need to be able to understand the blockchain and have an understanding of what they do in order to be able to protect the bank for illicit money flows. Then you need to have the processes within the banks, right? How does it work? What are escalation paths? What are our policies? All of these kind of things. And then the third thing is, can you support that with systems in order to increase the efficiency? Because if you take a look on what compliance officers do today, they basically have a lot of manual work on understanding those crypto flows, and they may or may not have some processes in place to handle with that. Now, in order to be able to scale up and to really embrace crypto, you need to have all of these three things in place. So all the compliance officers that have to deal with it need to have a proper understanding of what they're dealing with. Then you need to have organizational processes and policies in place, else you can't do anything. And then you want to have an efficient system in place that actually, in these cases, automates the manual work.
All right. Do you think outdated systems in the banking system hold this evolution back?
No, I don't think it's a systems problem. I think it's process and policies issues primarily, where the bank most banks, for example, in Holland, they have said, okay, now our policy is 10 years back was not to accept crypto. That's the policy. Okay, so that's the policy. Then you also don't need comprehensive systems,
no,
right? Because you can just say, no, I don't want this. Now the world has been evolving, so we see more and more banks that's embracing crypto, embracing stable coins, embracing customers who have earned their wealth in the crypto space, right? Because they also need to be banked, and you can also do more business with those people, right? But then you first need to change your policies and processes from no to crypto to, in some cases, yes to crypto, right? And then you set the boundaries. Okay, so this we can accept, that we cannot accept. And when you have set that policy and process, now you actually go into the rest of the threesome, right? So you need to have the people in place that can actually execute on this, and you need to have the system in place that can help you on the execution side.
All right. And if you look at it from the banks, as we do this episode, what happens if they don't do anything? If they choose to stay on the no path?
Well, that's a good question. I don't think that anybody can predict the future from that perspective. But I strongly believe that crypto is here to stay. So what we have seen in the last few years is that the institutional adoption of crypto has expanded tremendously, right? So it has been normalized within the financial ecosystem, right? We saw that, for example, with the ETFs on Bitcoin, where now financial institutions are massively jumping onto Bitcoin and offering these services into their customer base. And I don't think this is going to go back anymore. What we also see, for example, is the rapid adoption of stablecoin, as we now see that is a better payment rails with lower costs and with faster settlement times. And this is basically what we call the killer app at the moment of the blockchain. You can say no to those evolutions. That's fine, right? But then the question becomes who is adopting this? Now, when we take a look at that, we see, for example, Revolut in the retail space moving tremendously fast into this crypto ecosystem. And that also allows them to capture the Generation Z into their customer base. And what we have also validated is basically the bank where you create your first bank account is the bank that you will keep for life. And take a look at yourself. You're also still a customer at your first bank account when you opened your first bank account when you were like 8 or 10 years old. That's the bank account that you hold. That's probably also the bank account that holds your salary payments, right? And that's for most people that I have validated, the first bank is going to be your final bank, or it's going to be your stable bank. And if that's Revolut, right? Then all of the Gen Z moves into Revolut because it's very easy. But then our Dutch banks like ING and Rabobank and also the other traditional banks from all the other countries, right? Deutsche Bank. I mean, then they need to compete with a neobank basically to capture back the Gen Z user base in order to protect their future. So, do I think that it's a problem? Personally, my perspective is it's okay. It's not that bad, but you need to start thinking about how do you want to evolve as a bank, right? So you can also choose to have a specific customer group and not having another customer group because that just doesn't match your risk profile.
Yeah.
But do understand if you don't do anything at all, then you can expect that your user base will be growing older and older and not younger and younger. So towards the future, that may be a decision that you want to take if you want to start that adoption today, or maybe in 5 years, or maybe not at all. And that's depending on the risk appetite. But I think it's time to start evaluating this, what you want in that.
So it's more of being future ready, future proof from the bank's perspective.
Absolutely. Yes.
And how does Cense come in here?
Right. So what we've tried to solve basically is when you take a look at crypto owners is they always had, and I'm the same, of course. We've always had challenges with banks, specifically the banks that don't want anything to do with crypto. And we've basically validated why this is, right? So it's all about the complexity of the blockchain. It's about the process and policies that are in place or not, right? As people, processes, and systems. And in order to break through that complexity, what we have done is to make sure that we have a tool available, a system available, where a compliance officer doesn't have to deal himself with that complexity of the blockchain. We will decode that for a compliance officer to make sure that he gets a proper understanding in a similar way as he's already used to on the Euro network and the SEPA network, but then on the crypto network, but that he has the same insights. Fully applying the law, of course, because again, the law does not care if you use the SEPA network or the Bitcoin network. You just need to apply the law. And with Cense, this is exactly the area where we play. And from our perspective, most of the crypto flows are, of course, not illicit, right? So if we take a look on, for example, what Chainalysis says, 0.14% of the transactions have a criminal label, right? When I take a look at the society, I see that less than 5% of the people are involved with organized criminality or undermining activities with crypto. That also means that 95% of the people, including me and my neighbor and all of the other people, are just normal people that want to deal with crypto. They just want to make an investment into Bitcoin or something else, or play around to try to make some money left and right on the blockchain, right? Probably losing a bit of money, because that's what usually happens, right? But those people are the ones that should not have any friction with banking. Yet today, they still have friction with banking because of all the complexity. And that's where we really want to play. We want to facilitate the banks in accepting that 95% of the people that are just normal people that should not have all of these compliance checks, due diligence checks, questions over and over and over again. And our system basically answers all of these questions for the compliance officer to be able to say yes.
So if there's one thing you could say to the CEO of banks, what would it be?
I think if there's one thing, I would say it's time to evaluate your processes and policies. It's not up to me to say it's time to embrace blockchain, right? That's completely dependent on the risk appetite of the bank and how they want to evolve. But I do think that the maturity of the blockchain warrants a review of the policy that you want to have and to take an active decision. Do we want to embrace this or do we not want to embrace this? And if you want to embrace this, then make sure that you get your process, your people, and your systems into place to capture this brave new world.
Hugo, thank you for your time. In the next episode, we're going to tackle these same topics, but only then from a customer perspective.
Absolutely, because customers, they are the same side of the different side of the same metal, right? It's the same coin. The bank wants basically to have your money, but it's difficult. And the crypto owner wants to have the money on the bank account, but it's difficult, right?
Yeah.
Yes.
So thank you for your time, and I'll see you in the next episode.
Thank you.